This is Brad Wolff, and this is the end of day Emini review for August the 23rd, 2022. As you can see by looking at the top of the chart, today had a wedge top, then trading range. First bar of the day closed in the middle of yesterday's range. Not a great buy signal bar above, forcing you to trade too far at the top of the range. Bar 2, it's a sell signal, failed breakout above yesterday's range here. Some traders will take it. If they did, they'd be quick to get out as the market turned up here. Probably buyers below, so some traders would scalp out as the market went a certain number of points below here. The market formed a wedge top, 1, 2, and 3. Bulls would buy here, betting on a double bottom here or here. You can call it a second entry buy with this low and a double bottom with this low. The bulls that bought, they could get out somewhere below here. Some bulls would buy here, but with the possibility of 3 pushes up, 1, 2, 3, they would be quick to exit below here, which is a second entry short. Big bear bar, closing the gaps from here and testing the lows down here. Some traders will sell below, stop up here, betting that the bears will get a second leg down. You had some bulls that bought this low here and they scaled in lower, and they'll be disappointed enough and get out break even on this bull bar. The market went 0-0, so outside up and then outside down. Traders will sell below this bar. Some will be disappointed here, and if they were, they might get out above this bar. Others got out break even. And then some bears would hold short, betting that there would be more bears selling at a 50% pullback here. Bears would sell this close, they would sell below this low. They would not sell down here as it's a bear breakout below a channel, 1, 2, 3, and it's a failed breakout below this low. So a lot of bears would be buying back shorts somewhere down here, maybe above this bar. Tight enough channel down here that the first reversal up will probably fail and the market will retest the lows, which it did here. Bears got a second entry short. You can call it a second entry, or you can call it a triangle, 1, 2, 3, which would be a breakout pullback of this double top here and here. Regardless, the bulls failed to break above the moving average. Always in bulls can get out below this bar. If they did, do they buy again above this bar? They might, but this might be a trap. It's forcing bulls to buy just under the moving average here and after 3 consecutive bear bars. Traders will sell below here, sell below this low, and if they did, they'd be quick to exit somewhere down here or above this bar for the failed breakout below the wedge bottom. Bulls would buy, they'd buy above here, betting on a couple legs up. Some bulls would buy this high even though it's a breakout above this double top here. The bulls willing to buy it were hoping that they would get a strong upside breakout, and when the market gapped down here on this open, traders would start to sell out of longs, which is what they did on this bar. Traders will sell this close, they'd even sell down here. However, they would be quick to take profits, and the market went sideways for the rest of the day. The most important thing to remember on a day like today is when the open has a lot of trading range price action here, the rest of the day is probably going to have a lot of trading range price action. So if you look at the open here and draw a line, it's going to be the middle of this entire range down here. If you enjoyed this video, please go to the brookstradingcourse.com website where you can find more information and helpful articles as well as find out more about the trading course.